Hi friends. After a long time, I'm back to the YouTube again, and I guess from now on, I will be making some series of videos with respect to various companies where I'm quite bullish on. However, before you do any kind of investment, please do your own uh, research, because at the end of the day, it is about your risk and then your reward. Now let us go to the company which I'm talking about. So this is going to be a company called as LCAL, Lord's Chloro Alkali. You can see here in the recent past, it's got a lot of my attention. Why? Because there is a significant increase in the stock price. Nevertheless, even fundamentals of the company has also significantly increased. Later, we will come to that. But at this moment, you can see this technical chart. During 2021 March, it was somewhere 40, yeah, 50, 40 rupees, something like that. Now it is almost, in the last week, it has touched 400 rupees. That means it is a 10x rise, not less at all, in 1.5 years. And you can see here this particular technical chart where there is going to be a significant increase. Of course, there are some corrections, and there's a course of healthy growth. And you can see here, even this particular RSI chart of 14 and 80, you can also see that there is a significant uptrend which is going on. So now let us go and try to understand from the screener perspective, what are all the things which are significantly better in this particular company. So here, let us understand. So this company is into chemicals, and they are basically into caustic soda and related products. So after the COVID, since this caustic soda is going to be used in various different industries, after the COVID, most of the commercial activities were not going that well. And there was a lot of problems with respect to the various application industry of the LCAL. But however, in the recent past, in at least in the last 1 year, the various different industries which are important to Lord's Chloro have significantly improved. Like, for example, dyes, chemicals, paper, aluminium industries, so these kinds of things. And if you see, even the manufacturing capability or the capacity increase, Lords is spending a lot of revenue and also time. So from 275 metric ton to they are increasing to 300 metric ton. I think by this time they would have already done this particular capacity increase. And now why this stock price is going significantly higher is because the global commodity price of the caustic soda is significantly increased in the last 1 year, or at least you can say that 5 to 6 quarters, and it is not reducing at all. So continue even now at this particular point of time also, the trend appears to be going high. And if you see the Lord's Chloro's advantage, it is one of the significant player in North India, and in that uh, region, there are not many companies which are more than the size of Lord's Chloro. Of course, there are some big companies in western part of India or maybe southern part of India, but however, in the northern part of India, so Lord's Chloro is having a significant hold, and because of the logistic advantages as well, they are having a very good reach. Now we will go and try to see the other things which we have from the Lord's perspective. So it's round about 1,000, lesser than 1,000 crore company. Obviously, it is a small cap. Yeah, some people say small cap is riskier, but yeah, sometimes when there is more risk, you will be having the more reward as well. You can see the various different parameters of this particular company, like PEG in trailing 12 months, which is 0.00. That means it's really an awesome company to have significant exposure. And you can see the promoter holdings is 70, almost closer to 75, which is the threshold limit which is available as per the SEBI. Even those things are also like that. And if you see ROCE or ROE, both are significantly higher, like 31, 32%. In my opinion, it is significantly higher. Even book value has more than doubled in last 5 years. And then operating cash to the profit ratio is also more than 2. That means it's not only about a profit-making company, but it is also a company which is generating significant amount of operating cash flow as well, which is considered to be as one of the healthy signs of the company. Because sometimes some companies, they will just boost the profit value when they are reporting, and when it comes to the cash or collection from the customers, there will be not much realization. So if you see from all those perspective, in my opinion, yeah, Lords is relatively a good company. Even if you see the ROE, the latest to the 3-year trend, this is also almost doubled, or in fact more than doubled. And then of course, there is some debt, no doubt. 0.36 is the debt to equity ratio, but it is not that bad. So up to 0.5, we can always tolerate this one. And you can see that operating profit margin has also increased 30% from last year as well. And if you see the debt reduction, so that means they are just 64% of the last year value. That is very good. That means they have already repaid 36% of the debt that they had having before. So after doing investment, they still have a free cash flow of 60 crores, which is quite good in my opinion. And again, if you come and see the chart, it looks so good. It looks really so good. Or even if you see from the 3 years perspective, also this is a very nice chart to see this perspective and go ahead. And if you see the PE ratio, generally speaking, for even if you consider for 3-year period, the median is 8.4, which is not high at all for such a high growth company. And I think right now we are hovering around 16. So for this current growth of EPS that you're seeing here, in my opinion, this is very much undervalued. It's not only about reasonable value. In my opinion, this is significantly undervalued as well. Now, if you see the pros and cons, debt reduction is always good. It's expected to give a good quarter. This is the machine generated, which the screener.in has having some kind of automation, which is, in my opinion, very good. Debtor days have come down. That means they are able to collect the cash from their customers better, at least 50% better than the last year. And then even the sales of the company is also quite good. And with respect to cons, there is nothing really much visualization that we need to give. And even if you see the peers as well, in my opinion, Lords has a significantly better ratio than most of the other competitors as well. Of course, the industry itself is growing, no doubt, but in that, Lords is the company which is growing significantly better. Like, for example, you can see here price to cash growth. So this is 0.00. That is, in my opinion, awesome value. I mean, maybe in an investor's life, it might come once in his lifetime or something like that. And you can see the quarterly profit year-on-year growth. It's more than 10x. 985% means it's going to be more than 10x. In my opinion, yeah, lovely company. And if you see the annual growth of the profit in last 12 months, it is 48 or 49 times the last year's value that we have got. And profit has jumped 82 times in comparison to the sales jump that has happened. So yeah, these are all definitely going to be the insane numbers which we have to look for. And in fact, I was surprised and shocked to see that kind of a performance from any company, right? And if you see the other values like increase in the operating cash flow, it's 42 times it has increased. Yeah, almost most of the values are significantly better. Promoter holding, yeah, 75%, which we have already talked about it. Now, if you see this particular margin chart also, I did not show you during then. You can see here, beautifully looking increasing trend of the margins. Especially, I'm quite interested in the green line, which is the net profit margin. You can see it's continuously in the increasing trend, at least from 2020 March. So it is quite good. And then if you see the other things like sales, of course there is no great improvement in the sales value over the years, but if you see the profit, so they were having minus 2 crores. Now just straight away jump to 32 crores profit. So, and then right now it is 52 crores profit just in a single quarter addition with respect to the TTM. It has jumped by 20. You can just imagine how much the commodity prices have been significantly increased. If you see here, this is what I really love. 49 times in the trailing 12 months that they have increased their profit. And generally speaking, the stock price is always a lagging indicator with respect to the profit growth. So if you see that this has jumped 48 times, that means at some point of time in the future, this also is going to catch up that 48x. It may not be exactly the same value. Sometimes it's going to be lower or higher, but still anything above 40x, who says it is bad, right? So we can always see these kinds of things. And then if you see even from the balance sheet perspective, especially reserves, you can see where is 59 and where is 91. So yeah, again a 50% increase straight away just in a year. And then borrowings 65 to 42, it has almost reduced by half. So this is what exactly we want from a company where there is a significant external issue which is benefiting the company, and of course company is taking the full advantage of all those things. And this is what I really love. From minus 2 crores to 67 crores positive value as operating cash flow. Awesome. And then the net cash minus 6 crores to 31 crores positive. Again, awesome. So very rare that we are going to get some opportunity like this. So that is the reason why I am also doing a video just to tell you that, of course, there are opportunities like this at this moment in the Indian equity market. You can take significant advantage of this. And then promoters, holdings, all these things, yeah, we have already discussed, I think. Yeah. So now, having did everything, so I have more or less covered the basic technical part and also the important fundamental aspects of this company. Now it is up to you how you want to take decision and then move forward. Then whatever is there, then please do your own due diligence, and then yeah, go ahead and let's meet you without some other video as early as possible as well. Yeah, thank you so much.